Spotify has 180 million monthly active users, and if you think that's impressive, you're going to be interested in the upcoming IPO for Tencent Music Entertainment. The company filed to go public in the United States, with one of the key data points, Aaron, being that Tencent Music has 800 million monthly active users in China.
Not bad at all. So Tencent Music is essentially a holding company for 4 of China's largest music services of various types. And yeah, 800 million monthly active users is crazy, and it still is growing pretty quickly. And this is in China and also just in the greater Asian area anyways. And so, yeah, it should be a pretty massive IPO. What's interesting about the company, to me, besides just its obvious dominance and the fact that it's growing quickly, is how it makes money. So instead of relying solely on subscriptions and advertisements like a Spotify, Tencent Music actually makes most of its money from virtual gifts sent through live streaming. Live streaming has been like a big, trend in China lately, but it seems like Tencent Music is in on it too. Also, online karaoke is a big revenue driver, and song sales. So this is a very different type of music company than we see here domestically, and they also are more profitable too, with gross margins higher than what we would see in a Spotify here too. So it'll be really interesting to see how this company does once it's public.
Tough week for Stitch Fix. Fourth quarter revenue for the online apparel company came in 23% higher than a year ago, but Wall Street was looking for more, and shares of Stitch Fix down 40% this week. Maddie, is that an overreaction? Because on the surface, it kind of looks like one.
It does look like an overreaction to me, but you have to go back to the previous quarter where revenue was up 29%, active clients grew 30%, and that got investors excited. The stock was up 40% from that quarterly announcement. So going into this one, and then certainly, as you mentioned, revenue was just up 23%. Active clients were up 25%. So that's quite a sharp deceleration. And I think a company like Stitch Fix, which obviously, like a lot of growth companies, was given a pretty high valuation going in. At the same time, I look at the stock now after the drubbing it's gotten this week, and you have a business that still growing about 20%, maybe 20 to 25%, trading for about a little over 2 times sales, and it's profitable. And this is a business that I know, for one, David Gardner's really excited about, and Tom is excited about as well. It's an interesting kind of a disruptor in the apparel business. So it's one I'm kind of interested now that, of course, it's down 30% from its high.
Yeah, I think the concept of what they're doing is fascinating. They're essentially a data company that happens to sell and deliver clothes, right? But I think they're finding that it's not that easy to keep the momentum going. So for years, Stitch Fix pretty much just relied on word of mouth marketing in order to grow its brand, grow its revenue. And now, even though it is the top dog, there's more competition than there's ever been. So they're having to pay up more for customer acquisition than they've ever had to do before. So I think we're starting to see some of those issues kind of appear in the financials. And retention isn't awesome either. So they do have issues to work with, even though it's still a really interesting idea.